Hi, I'm Hedgeye's founder and CEO, Keith McCullough. Good news, the Hedgeye Investing Summit is back. We're super excited about this one as always. The first week of October, I'll be hosting in-depth conversations with the smartest minds in investing. Some of my favorite people like Liz Ann Sonders, Kyle Bass, and Grant Williams, just to name a few. We'll be discussing the big stuff, the big trends impacting markets in the days, weeks, and months to come. You don't want to miss this one. Registration's free. How good's that? You won't hear pro-to-pro conversations like this anywhere else, anytime. You see that the most likely outcome for 2022 being stagflation, quad 3, or deflation, quad 4. Pick a quad. I mean, what do you think it's going to be?
It could even be an environment where it's both, if some of these supply chain bottlenecks maintain that sort of upward pressure on traditional inflation metrics and a still wide spread between measures like PPI and CPI, that could carry into 2022. I think whether it's the number of container ships sitting off the ports, the fact that even though there are plants that are starting to come online, new plants in terms of semiconductors, a lot of the estimates for when that problem starts to unclog continue to get pushed out into the second part of 2022. So I think the next year could be a year that has both of those stories.
Yeah, I do too. I think quad 4 by the middle of next year is well, against those base effects, it's a mathematical certainty. It's just whether or not markets interpret it as much. The toughest base effects in the history of base effects. What could possibly go wrong? And now that everybody's a base effect. And now everybody talks base effects.
Everybody talks about base effects. I no longer feel compelled to explain the term. If you haven't heard it, I'd love to know what lovely rock you've been living on, because it's a happy place where we don't worry about stuff like that.
The best is the Fed. Like, they understand base effects, but they don't understand how to use them. So that's even better. Against steepening base effects, let me help you. Against steepening base effects, inflation continues to accelerate. That's a problem. All right, here's a good question from Mike in Connecticut. I personally. This is actually a tough one. If you can't time markets, Liz Ann, or rely consistently on negative correlations, how do you advise drawdown adverse clients to survive the next major market correction? Do they use stops?
I think there are various strategies that individual investors can employ, and it depends on what the overall structure of the portfolio is, how broadly diversified it is, whether from a turnover perspective, tax implication perspective, it's appropriate to use, whether it's stop loss points, whether some hedging can be done in the options market. The one, I think, overarching strategy that is maybe more brilliant than a lot of other traditional disciplines is periodic rebalancing. And I think there are times, especially when you start to see elevated volatility and you see more rapid fire sector rotations or even factor rotations, if you let portfolio volatility be your guide to the periodicity of rebalancing, of course, it forces us to know what we know we're supposed to do, which is not so much buy low, sell high, if that infers all in, all out, but add low, trim high, and stay in gear by using volatility to your advantage. And I think for a lot of more trading-oriented folks that don't have a plan, they tend to do the opposite. They let their winners run until it becomes an outsized portion of the portfolio. When the inevitable, Ben Graham reversion to the mean happens, you're left holding a bigger bag than you would have otherwise if you just heed the discipline associated with rebalancing. So I think the timing around rebalancing and maybe considering less calendar-based static rebalancing and more portfolio volatility-based rebalancing can sometimes help weather an environment where risks go up, as does volatility.
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.